Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today we're talking about casualty losses, personal casualty losses. Now, this is not a topic that a lot of people talk about, but in the wake of all these hurricanes and whatnot, this is something that you really need to know with tax reform. So a casualty loss, let me read you the definition of a casualty loss. It occurs when there is property damage from a sudden unanticipated event, not from a gradual progressive damage. Examples of events qualifying as a casualty include acts of nature like hurricanes, tornadoes, floods, storms, and volcanic eruptions, shipwrecks, sonic booms, vandalism, fires, car accidents, theft, and terrorist attacks. Okay? Those things, will cause a casualty loss. Now, one of the things that you have to be aware of is that I'm sorry, I had something go crazy with my screen over here. Let me get this right. All right, there we go. Something went kind of crazy with my technology over here. Okay, so with this is a case for you to really go back and look to see if you have enough insurance. All right. Because with tax reform removed the ability to be able to deduct personal casualty losses or theft losses in places where you are not in a federally declared disaster area. So let me give you an example. So just like we've had hurricanes Michael and Florence come through, though there are states that are federally declared disaster areas. So those people have casualty losses that they can claim. However, let's just say, for instance, that you live in a T intersection, and you know how that house that's on the other side of the T, hey, a car can just completely miss that stop sign and wind up right in your living room. So if you don't have enough insurance to cover that and you have to come out of your pocket, well, you don't get to deduct that from your taxes as an itemized deduction anymore. So it's really important that that you really stop to take a look to see if you have enough insurance coverage. So the way that the casualty loss used to work is that you could deduct everything that exceeded $100. And also, if your insurance company reimbursed you, then you don't have a loss. We're talking about something that you have to come out of pocket for. Or if somebody broke in and, vandalized your house or stole your furniture, stole your electronics and everything, if you didn't have enough insurance to cover that, then you could deduct that on your taxes. But that's not the case anymore. So if you suffer a loss, like if your house catches on fire and you're underinsured, well, you're at a loss. Right. And so right now, this is from January 1st, 2018 through December 31st, 2025. However, this could become permanent. We have no idea what's going to happen, but just know that if you don't have enough insurance to cover those losses, then if you have to come out of pocket, you can't deduct that from your taxes. So this is something where I'm encouraging you to really go and take a look at your insurance. I am not an insurance professional. I'm just telling you on the tax side how this works. And so let me give you an example of a loss that is not tax deductible. I have a client that I'm working with who her air conditioner was leaking and whatnot. Anywho, over time, it caused a lot of damage in her home. So she didn't have insurance to cover that. So she had to take out money from her retirement account in order to fix her home. Well, that money is then taxable. Okay. And then, she can't deduct it from her taxes. Now, what can happen is you add it to the basis of your home, which means the cost of your home when you sell it. But, if you never sell it, then, this is a loss. So, so you really have to look to make sure that you have proper insurance coverage, because there is no other relief for you not anymore. Right. So we're talking about, whatever your theft insurance, if you need flood insurance, whatever kind of insurance that is applicable to your area, you need to make sure that you're properly covered. And I can tell you, as someone who experienced a fire and lost everything, having good insurance is so key for you. Okay. I can tell you, if I could kiss the man that wrote my insurance policy today, and this happened many years ago, I most certainly would, because I didn't miss a beat. But when I purchased my insurance, I had no idea what I was doing. Okay, I was young. This was my first home, and I could have gotten the insurance person that just listened to what I said and wrote me a policy based on that. I had a person who said, okay, yeah, I hear what you're saying, but this is what we're going to do. And I didn't have to worry about coming out of pocket for anything. But now, because there's no relief for that, there's no, you can't deduct that on your taxes. And if you don't have that insurance coverage, then you're talking about coming out of pocket and being at a loss. Or if you have to do like my client did and have to come withdraw from your retirement account in order to repair this damage. And then, so you're paying for damage on your home, and then you got a tax bill on top of that. This can get kind of ugly. So, most people you don't want to pay the cost of insurance because what if I never use it? Well, the problem with insurance is if you need it and you don't have it, then you got a problem. So let this be the warning to you to call your insurance company to make sure that whether you rent, if you have renter's insurance enough to cover that, if you own, to cover your structure, to cover the interior, to cover theft, to cover all, whatever, again, is applicable to your area, because not all areas are flood zones and you have flood insurance. Not all areas have different types of insurance. So yeah, this whole casualty loss thing, it doesn't seem like a big deal now, but wait until something happens and you need some insurance and you don't have it. Then what do you do? And the federally declared disaster area is the key. So if you're not in a federally declared disaster area and something happens, then you don't have a casualty loss and you have to recover from that out of pocket if you don't have insurance to cover that. All right. So this one's short, but I hope it helps you out, you guys, because you know what? These hurricanes and all of this stuff, if you're a home business owner and your home is destroyed, guess what? Your business is destroyed, right? Your dwelling is destroyed. Depending on what you do, if you've got your online business and hey, the hurricane or tornado comes and take your laptop to Oz, then what are you going to do until then, right? So these are the kinds of things that you have to think about as a business owner to make sure that your insurance covers these things. And if you have to have additional business insurance to make sure you're covered, it is worth the investment in order for you to be able to recover from these types of events and not have to come out of your pocket. Okay, so that's it for me today, guys. Also, want to remind you, my new book is available on Amazon. I'll put the link in the description when we're done. But yep, it is available for purchase on Amazon. This is a great book for your new business owners, to really learn how to think about business, to teach. This book teaches you things that you don't have time to teach your team. This will teach your team how to think like a business owner. All right. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day. I'll see y'all next time. Bye.